you said in the statement the company, this new company will assist in building the company's capital markets profile. Talk to us about what this strategy means or what the strategy looks like moving forward.
Yeah, thanks very much and good morning. The strategy is really predicated on three fundamental things. Operational excellence, really creating sustainable shareholder returns, and really thinking through the fundamentals for the PGM market and how we can create future demand for the products that we mine. And so when I think about operational excellence, that really has been focused around really creating value from the assets that we have within the portfolio. So both our assets here in South Africa and then also in Zimbabwe, so Mogalakwena, Amandelbult, Mototolo and Unki, and really then also the integrated value chain that we have. So we go from mine all the way through to refining, and we believe that given the resource endowment that we have, that we can extract further value from that. And then as a company going forward, we're really focused around value over volume. So really creating that value from the assets and then being incredibly disciplined in our capital allocation. And therefore thinking through superior shareholder returns as we embark on our new journey as Valterra Platinum.
What are you looking to do in terms of value? Like, where are you investing in to ensure that you get the most value within this new spin-off?
Yes, so as I said, we've got an incredible endowment in multi-decade life assets in the PGM sector. The assets that we have are really world-class, and therefore our opportunity is to extract the value from our existing asset base. And so we're focused around continuing our exploration at Mogalakwena and potentially going underground at our Mogalakwena mine, which has a life in excess of 80 years. We're also focused around extending the life of the mine at our Mototolo operation on the Eastern Limb in South Africa, and then also how we extract further value from debottlenecking and optimizing our processing assets. And we're looking to repurpose one of our smelters in order to continue to treat material that we have. And that's where our key focus is, in addition to not only coming back to that operational excellence and ensuring that all our assets operate sustainably in the lower half of the cost curve, and then continuing to generate positive cash margins even at the low point in the price cycle.
Well, I'm glad you brought up the price cycle, because last week we did see platinum prices enjoying a bit of a rally. How do you see the broader context of what we're seeing, the macro conditions, affecting the business right now, especially as you're looking to the spin-off?
Yeah, so we're in the mining industry, so price volatility and PGM volatility is a fact of life. And we've certainly seen the PGM prices rise from 2021 and 2022, and they've come off those highs in 2023. And so we see that volatility continuing, predominantly driven by macroeconomic market uncertainty, as well as just some general sentiment around PGMs. But importantly for us is what we can do as a business is really focus on what we can control. And that's how we deal with that volatility. So therefore, focused on our cost optimization program, capital efficiency, where last year we delivered 12 billion rands of cost and capital savings. We've got another 4 billion rand program, certainly places all of our assets in that lower half of the cost curve. But in addition to that, so not only through operational excellence, just how we then maximize the revenue from the minerals that we mine. So not only are we focused around PGMs, but we're also focused around chrome, our base metals from nickel and copper, and we also produce gold, which also certainly in the current price environment helps support our cash flow margins as a business.
So you believe right now current market conditions are actually beneficial to the business bottom line? Is that what you're saying?
So I fundamentally believe that PGM prices should be higher than where they are today, just given the deficits that we see within the market and a positive outlook for PGMs, given sort of the changes in the nature of the energy transition. And so certainly, I think, once we have greater stability from a global macroeconomic perspective, you'll see sort of prices recover. But that being said, I really focused around what we can control. And we're also, as a company going forward, focused around market development. So how can we diversify the products that we mine and sell to a broader market, and how do we think through that energy transition as well? So can we play our space? Can we play in the space of hydrogen, both generation and also mobility? how can we think about our role in sustainable fuels, and also how can we use batteries, how can we use PGMs in battery technologies, and all of those aspects we as Volterra Platinum will continue to invest in and look for those new diversified markets.
So does electric vehicles, ultimately get in the way of those future aspirations? Because a lot of your metals are based on gasoline and diesel products.
So certainly, pure battery electric vehicles today don't contain any PGMs. And we're looking at how do we then opportunities where PGMs can be used in the future in battery technology. But that being said, I think the energy transition is going to take us a lot longer and it's a little bit more a little bit different to how we had sort of planned out 12 months ago. And as a consequence of that, PGMs have a positive role to play in hybrid vehicles, as I said, in hydrogen and the generation of hydrogen, but also importantly, looking for other markets where we can utilize PGMs in other industrial applications, such as we can continue to see that demand for PGMs into the future.